Hey, we're excited to be back on the air. We were doing these every week during COVID, and it got to be just that you got up Monday morning and you're going to be doing a big uh, telethon sort of. But we laid off for a while, but we've come back with some. When there's a great issue, we want to get the word out there. So we love it when people sign on to join us. So we look forward to having a great audience today. And we've got two tremendous speakers, compliments of the Kentucky Chamber of Commerce. And so I'm going to pitch it over to Kendra. I want you to introduce our speakers and we'll get this day rolling.
Yeah, big thank you to the Kentucky Chamber. They've really been at the forefront on a lot of workforce issues lately, childcare being one of the top concerns that we hear every day as HR professionals, as a deterrent from those that are able to enter the workforce or really able to meet the needs of our workforce. So we've got Charles All with us here today. He is the executive director for the Kentucky Chamber Center for Policy and Research, and he has been very heavily involved in crafting this piece of legislation. So we're really going to hear firsthand from the gentleman who really helped pull everything together. And then we've got Lisa Johnson here with us. So Lisa leads HR for the Kentucky Chamber. She's phenomenal too, and she has been through the process of actually applying for the Child Care Assistance Partnership on behalf of the Chamber and for some of the employees. So she's going to give us a firsthand account of what that looks like. So many thanks to both of you today for hopping on and for sharing words of wisdom with us.
Well, thank you very much for having us. We always appreciate an opportunity to get a chance to talk with such a great group. I love getting an opportunity to talk with HR experts. It's a very intimidating audience for me, and I'll talk a little more about that in a minute. But I just really value the work that HR professionals do in the workplace and just throughout our state as a whole. And thank you all also for the kind words about the work that the Chamber has been doing. I'm Charles All. As was mentioned, I'm the executive director of the Kentucky Chamber Center for Policy and Research. And joining me here today is my colleague, Lisa Johnson, who's the Human Resource Officer for the Kentucky Chamber. And she's going to talk through some more of the logistics of how this whole program works. And so what we're going to be doing today is I'm going to kind of walk you all through the origins of this program, how it came to be, why the Chamber supported this and was so heavily involved with it, and helping kind of get this thing up off the ground. And then we'll talk through a little bit some childcare challenges, the benefits of offering a childcare benefit as an employer. And then Lisa can actually kind of dive into some of the logistics of the program. And then we can also refer you all to a whole host of different resources that you can think about as you're looking to address childcare challenges within your own workforces. I always like to start these conversations off with a couple of what I think are really important caveats. First of all, I am not an HR professional. So when I say I'm intimidated by this audience, that's why I'm so intimidated by it. I've never worked in the HR field. I've always worked in public policy research, legislative analysis, economic research. That's what I do at the Chamber. And so I really defer to Lisa and you all on some of the mechanics of how this works from an HR perspective. The other thing I like to point out, I'm also not a childcare expert. A lot of my work involves tax policy, unemployment insurance, a lot of the nitty-gritty of the business world, but I ended up getting heavily involved in the childcare public policy space for reasons I'm going to talk about here in a few minutes. It also helps that I happen to be married to somebody who is very well steeped in childcare policy, so I know a little bit more than the average bear, but I think just those two things are important to know going into this, is we're kind of all learning in this space, and myself included. And I think that's actually a nice place to be, especially as we start talking through the Kentucky Employee Child Care Assistance Partnership. So let me talk a little bit about origins and why we got involved with this and why it's such a pressing issue. Anybody on this call that's had any involvement with hiring, retaining staff in any capacity, you know some of the challenges that we're facing in Kentucky. The labor market tightness that we talk about, that is a national trend. It's really a global trend in a lot of ways. And that's an important thing to acknowledge. What I like to tell people, though, is that whatever is going on in other countries, whatever is going on in other states, in terms of labor market challenges, hiring challenges, it's worse here in Kentucky. And one of the reasons for that is that we have a smaller percentage of our adult population that actively participates in the workforce. And so that means folks that are employed or folks that are actively looking for work. Kentucky's workforce participation rate is about 57.6%. That's lower than it was last year. That's lower than it was before the pandemic. Even worse, though, we're about the seventh lowest workforce participation rate in the nation. And so what that means for a Kentucky employer, there's just less workers to go around. So we can talk about workforce quality. Workforce quantity, though, is a really big part of this. It's just quite a bit harder to hire in this state than what you find in other states. We've written a lot about this. One of the big reports that we produced on this issue was in 2021, a big report called 20 Years in the Making, Kentucky's Workforce Crisis, where we looked at a whole host of different types of challenges that were contributing to this labor market tightness that we see in Kentucky, working to explain why we have such low rates of workforce participation. And we looked at a bunch of different causes, things related to substance use disorder, public benefit type programs, and some of the challenges that those create. Looked at a number of different things, but one of the most pressing was childcare. And that includes access to childcare, then also the ability to afford childcare. I think any working parent with young children, this is something that is pretty intuitive. You can understand how childcare challenges can affect and contribute to workforce challenges. I think the easiest way to explain it, though, is just to remind folks that if you have a young child and you cannot find a safe, healthy place for them to be for about 8 hours a day, you simply can't work. No one is going to just leave their child. Well, some people might, but in general, I think most folks are going to want to avoid just leaving their child to fend for themselves when they're 1 year old, 2 years old, whatever it might be. So the reality is that if you can't find a place for your child to be, you're probably just not going to work. Or if you can't afford it, again, you're just not going to be able to work. And survey data really helps us illustrate that sort of intuitive thought. A survey that I'm going to refer to kind of throughout the first part of this conversation here is a great survey that was done by an organization called the Bipartisan Policy Center. And what BBC did is they did surveys of employees and they did surveys of employers. And the employees they surveyed were specifically folks who had young children between the ages of 0 to 5. And one of the things they found is that 4 in 10 working parents with young children have quit a job due to childcare responsibilities. 1 in 3 of these parents with young children report leaving the workforce altogether at some point because of childcare challenges. Those are really, really big numbers. And this is something the media has picked up on too. There's this great Wall Street Journal piece that came out just a few months ago talking about how the affordability of childcare is keeping a whole lot of folks out of the workforce. And specifically, they highlighted a young woman named Kaylee in their story from St. Louis. And what happened to Kaylee was she got pregnant with twins. And she was working, I believe, as a receptionist at a dentist's office. And for her, when she realized how much it was going to cost to put her children in quality childcare while she was working, made it just simply not cost effective for her to continue working. So she simply left the workforce altogether. And that's a story that we have heard repeatedly from employers where they have this really great staffer, this really great talent. However, that person just has to leave because it just makes more economic sense for them to step out of the workforce. So when we talk about the childcare challenge in Kentucky, it's really a two-part thing. You have supply issues and then you have cost issues. On the supply side of things, this is a really serious problem. We simply have fewer options in Kentucky when it comes to finding childcare in the first place. This chart here helps illustrate that. The number of licensed childcare providers in Kentucky has been essentially cut in half over the past decade. Going from 2012 to 2022, we saw a decline roughly about 49%. This doesn't include some of your unregulated facilities that are out there. There's still quite a few of those, but this is just kind of a snapshot of how hard it is for a lot of folks to find childcare. Cost, though, is a really big part of this. Even if you can find childcare in your community, you might not necessarily be able to afford it. In a lot of communities throughout Kentucky, the cost of childcare rivals or even surpasses the cost of your standard mortgage. These are just a couple of examples of that. If you're in Crittenden County out in Western Kentucky, for example, quality care for a toddler is going to be close to $7,000 per year. A mortgage there, about $7,000 per year. Similarly, in Pike County, out in the eastern part of the state, you see a similar dynamic where it costs roughly the same as a mortgage. Now, that's for one kid. Multiply that a little bit. Think about Kaylee, who had twins. It just creates a very, very difficult dynamic for an individual to continue working when they're trying to weigh, do I want to stay in the workforce or do I want to, figure out another childcare solution? One of the things we thought about at the chamber is how can we help employers be a bigger part of the solution? And I think there is a lot of different ways that employers can play a role in this. And it's important to keep in mind, government is not going to be the sole solution to this problem. It's going to require a combined effort of employers, everyday people, the state, federal government, local governments. We're all going to have to work together to solve this issue. And from an employer perspective, there's a whole lot to gain if you as an employer are able to step in and be part of the solution for your workers who are struggling with childcare challenges. You can see benefits in terms of improved employee retention. There's good data to support that. And you can also, in general, help prevent working parents from leaving the workforce. Think about that workforce participation number. Increasing workforce participation in Kentucky, that falls on all of us. There are steps that all of us can be doing as employers, as individuals, as everyday residents of this state. There's all things that we can be doing to help support workforce participation. And that is a very, very important thing for Kentucky's economy. Employees place a very, very high premium on these types of benefits. A good example of that, going back to this Bipartisan Policy Center survey, 85% of working parents would find it helpful if their employer offered a benefit to help them pay for childcare. Another survey we looked at showed that 67% of workers not receiving childcare benefits say they would be more loyal to their current employers if they did. Keep in mind the amount of job switching we're seeing these days, the amount of folks that are quitting, moving to other employers these days. This is something that you can step in with and help stabilize that workforce and increase retention and also help with attraction. One of the things we've also seen from survey data, however, suggests that employers might not be fully aware of how important childcare benefits might be to their workers. So keep in mind that survey data I just showed you, where we see clearly that employers are very interested in this. Look at some other survey data. One statistic here showing nearly 70% of employers reported that childcare access and affordability doesn't impact employee retention or hiring at their firm. That again kind of conflicts with what employees are saying. Similar to that, only about 18% of employers offered some form of benefit to help employees pay for childcare. And a lot of those benefits are generally going to be things like dependent care FSAs. That's generally the most popular childcare benefit that you see. Employees like that, but as anyone here who's maybe administered a DFSA, those things can be somewhat limited in terms of how they actually affect and help out with employees' childcare costs. So this ultimately led us to working on a piece of legislation in the 2022 legislative session called House Bill 499, which created a new program called the Employee Child Care Assistance Partnership. One of the things I always like to tell folks about this legislation is that it is not the sole solution to the childcare challenges facing Kentucky. It is one part of a much broader set of measures that we will need to pursue to make sure that childcare does not create a barrier for anybody to join the workforce. This is a picture from late in the 2022 legislative session. At about 9 p.m. at night, we had about 10 days left in the session. We are appearing before the House Appropriations and Revenue Committee. That's a committee that I appear before on a frequent basis, where I'm usually talking about intricate tax policy, tax reform, those types of issues. So you can imagine it was a little bit bewildering for me to find myself there requesting funding from this committee for this new childcare program that we were helping to stand up. And in the middle here is Representative Samara Heverin from the Elizabethtown area. Representative Heverin was the sponsor for this program or this legislation. And she really was integral to making this thing happen in the first place. And she really, really pursued it aggressively and helped us get it across the finish line. Okay, so what is this thing? I'm going to give you guys just kind of a quick rundown, and then Lisa here in a minute is going to talk you through some more of the details on what it actually looks like when you are accessing this program. The idea behind it is that it is a public-private partnership model that is aimed at encouraging and empowering employer engagements in the childcare, within the childcare space. The basic idea of it is that if you are an employer and you want to offer some sort of financial contribution to help your employee with the cost of childcare, the state will step in and match that assistance. So a really simple example of that is if you are willing as an employer to offer an employee, say $100 a month, $50 a month, $25 a month, whatever it might be, the state will step in and match that on a dollar for dollar basis. All sorts of rules and restrictions and eligibility thresholds apply, and we can talk through those here in a minute, but that's the basic idea. If you as the employer are willing to offer some financial assistance to your employee, the state can step in and match that. And the real benefit there to the employee is that, if you offer that $100 benefit per month, the state steps in, adding an additional $100. They could be potentially reducing their monthly cost by 30-40%. That's a pretty big chunk out of some of the childcare expenses that a lot of these employees face. And from an employee retention perspective, you can imagine the relationship that helps create between the employer and the employee. That's a really tight fit right there. And it's something that, again, survey data shows us that employees place a really high premium on. I think some of the most important rules and restrictions that folks need to be aware of, first of all, not all child care providers can necessarily participate. Most of them can, but one of the ways that this was structured throughout the legislative process is that dollars can only go to child care providers that are considered Kentucky All-Star participants. What that means is Kentucky All-Stars is our quality rating system. That essentially means you're a licensed child care provider. Most child care providers, most child care centers in the state, they're going to fall under this. But the idea there is that if you have, maybe a neighbor or a relative that's watching the child down the street, dollars aren't necessarily going to flow to those individuals. But if it's a licensed center, or if it's even a licensed in-home provider, those are the types of programs, or those are the types of providers that will be eligible for it. Another thing to keep in mind here with a couple other things to keep in mind here is with, the state match. The way it's set up is the state match will go to the child care provider. And again, if you're giving $100, the intent would be for the state to step in, match that with another $100. As that employee's household income increases, or depending on where the employee household income falls, that match might be less than 100%. It essentially fluctuates between 100% and a 50% match. And so if it's a really high income individual or a really high income household, they're not going to get quite as much of a match as, say, a middle income household. So there's some flexibility there. The other thing to keep aware of is there's another program in Kentucky called the Child Care Assistance Program, formerly known as CCAP, and this is our subsidy program. This is for lower to middle income workers. And if an employee applies to participate in this new program, the Employee Child Care Assistance Partnership, but they meet the income thresholds for the Child Care Assistance Program, the state will refer them to that program and deny the application to participate in this new program. And so what that would mean from an employer perspective is the employer wouldn't be on the hook for providing any sort of benefits. Instead, that employee would be referred to this other program where they would essentially receive fully subsidized childcare. And that's still a good thing, I think, for the employer, because the employer is the one making that direct connection. So there's still a lot of benefit there. I think one of the most important things to keep in mind with this program is that it's very new, and it's also unique to Kentucky. In terms of its newness, applications started being accepted just in April. The dollars attached to the program will start flowing in July. We had to align that with the state's fiscal year. And so the newness of this program means a lot of things. One of the most important is that everybody involved in this, employers, the states, employees, people like me, we're all learning. We're learning how this works. It's also unique to Kentucky. And what that means is we don't really have other states where we can necessarily model this after. So everyone involved is very slowly kind of learning how this is going to work. The way the state set up the program was kind of a bare bones operation because they wanted to set something up that could be easily changed over time. And so they didn't want to make a huge investment in some sort of, sophisticated application process when they didn't quite know where this is going to go. So instead, it's a very bare bones operation where we're all going to be learning. And the hope is that here in a couple of years, we can learn enough to stand something up that is more sophisticated, easier to use, easier to access. But for right now, we're very much in that learning phase. The uniqueness component of this, I think, is a really good one for employers to know about. We often hear about competition with Ohio, competition with Indiana, competition with Tennessee. wherever it might be. Those states do not have a program like this. In fact, virtually no state in the nation has a program really comparable to what Kentucky has with the Employee Child Care Assistance Partnership. The closest thing is a program in Michigan called TriShare. They have a similar model where the state is partnering with employers to help cover the cost for employees when it comes to childcare, but other states are considering it. North Carolina, for example, had some legislation that would craft something really similar to this. Texas has been considering legislation to do, again, something really, really similar. We've heard about Missouri looking at it. I know for a fact states like Indiana, Tennessee, Ohio, they're watching this very, very closely. But this is one of those things that I think gives Kentucky employers a leg up over the competition because, again, no other state has this. So it's going to be very, very unique. As part of that learning process, the state is charged with gathering a lot of data on this. We're going to be measuring success. There's a lot of reports that'll be coming out. In terms of funding that's available for it, the legislature dedicated $15 million to this. And I can tell you there's plenty of money to go around for this. Those dollars will probably carry over into future years. But as of right now, if any employer is interested in working with this program, there's still plenty of money on the table to go after. And so that's a question that's come up, I know, for me, from several employers. There's definitely a lot of opportunity. Okay, with that, I'm going to turn things over to my colleague, Lisa Johnson, who's actually gone through the process. It is an actual HR expert as opposed to me. And so, Lisa, I'm going to turn things over to you.
Thank you very much, Charles. It's a pleasure to be here. As you can imagine, with the support that the Chamber has provided to this legislation and our interest in seeing it succeed, we wanted to be on the front end of the process to understand what it was about. And so I had the opportunity to be a big piece of that, and I was happy to do so. With the caveats that Charles has already laid out so well, I would just say right off the bat that my experience was satisfactory for this process. I didn't find it unduly a hardship or anything of that kind. So I just wanted to put that out there. So some of the things in terms of the steps that I experienced, and then some tips for you that might make it easier for you. One of the things that we wanted to determine right off was our workforce at the Chamber. What were the challenges? What type of exposure would we have in terms of interest in participating in this partnership? And so when it was announced that it would pass, which was wonderful, we just did an actual one-sentence poll via email, an email poll. And in that poll, I polled the entire Chamber, about 53 employees, asked the question of, do you have a child in a state accredited or certified child care establishment? And would you be interested in an offering of an additional benefit if the Chamber helped to offset your costs? Yes or no? And then in that email, I just had a couple of links to some of the articles about the Child Care Assistance Partnership program. And the feedback that I received from that was that there would be 6 employees who were interested in that. So that gave us an idea of our exposure if we were to plan for how much we would want to participate for each of our employees. So that was a good step to take. Accessing the application and reviewing it is very helpful because that's a time investment. The Chamber has 53 employees. We had 6 that were interested. Depending upon the size of your organization, that could be a small time investment or a large time investment. If you haven't seen the application, it's a 3-part application. There's a page for the employer, there's a page for the employee, and there's a page for the child care provider. What I found to be easiest, because it's not an online document, you download it and then you complete it manually by hand. So what I found helpful was to send the employees who were interested the employee section and the child care provider section, send it to them along with additional information that I found on the website that Charles helped me with in locating it. Sent that to them, had them pursue that with their child care provider and complete it. And once they returned it, I then completed the employer section. Once you see this, you may find a different path is preferable to your organization, but for me, with a number of employees that we had, that was just fine. So when those applications came in, they were completed by the employee and the child care provider, and I just did the page for the employer. One thing that I will say is that I found the experience to be very much like an employee verification of employment that we get, for any number of things from financial institutions. That same type of information, the employee's job title, their date of services, their past paycheck situations, things like that, and estimating 5+ minutes to complete. So that was my experience with that piece of it. And with that, it gives you a good understanding of time commitment from the budget conversations and then planning. So based upon that, with 6 employees, talked with our CFO and our president, determined what the chamber would put towards this that we would hope that would be matched by the state. And then from a planning standpoint, I'm thinking 6 employees, about 15 minutes apiece to complete this. So that was a good strategy to go through that worked well for me and that worked well for the chamber. One of the things that I did when working with the employees to complete the individual applications, there is a very nice FAQ, frequently asked questions document that's on the site. And even though it also has questions that apply to the employer, the format of it is very user-friendly, and it gives the employee a very good understanding of, okay, how does this thing work? How does this thing function? What can I expect? And so when I sent the application, I made sure to include the FAQ along with it. For our part, we have a lot of employees. We're largely hybrid. So for me, it was easier to send via email and then make myself available for in-person questions or telephone question and answer after they had a chance to review it. So we didn't start off with in-person meetings. You may find that that's easier to do. Once the employee provided the information and I completed the section for the employer, I submitted the applications to the cabinet. It was an easy process, email, and off it went. So from a process standpoint and a completion standpoint, it wasn't unduly arduous. I found it very reasonable, understanding that, this is our first stab at this, and we're going to be tweaking along the way, and we're just trying to see how well we can make this work. So a pretty good experience. Could you go to the next slide for me, Charles? So some things that I encountered that I thought, well, this will be helpful going forward, or could be helpful for someone who is doing this. I mentioned about sharing the FAQ. I found that to be a very helpful document for our employees. As Charles mentioned, he's not a child care assistance program expert, neither am I. I was attending the sessions. I was trying to absorb it. It's a lot. And I found that, I don't want to be the point person for fielding those kinds of questions. I first want to arm the employees with the information and then make sure that they have the contact information for the Cabinet for Health and Family Services so that they can get quick and accurate responses. So that seems to have worked well. The folks have been responsive. Another thing that for the employees that I noticed across the board, when we received the responses back from the employees and I submitted them to the cabinet, there was one question that we missed every time. And it was a question about if you have a person in your household who also has a full-time employer, they want the pay history of that person as well. Not the pay history, the verification of employment of that person as well. And the verification can be a letter from the employer, or it can be like a paycheck stub, but they need to know that that person, if they're listed as being employed, they want confirmation of it. And so we missed that. The wording is very, it's worded differently on that section. And so I had made a note to myself that in future, as I have folks that ask for application for this or seek application for this, I'll make sure that we have that checked before we submit the information to the cabinet. It was just a back and forth that we can scratch, right, and be more efficient. That was really it from the employee standpoint. For us as employers, as I mentioned, it's very much like an employment verification document. So to the extent that you have that information there, you can really make it an expedited process. Once I recognize that 5 minutes or so to complete the form. So it asks for about 2 or 3 months prior paycheck information, and it gives you the option of including paycheck stubs. I decided to go ahead and provide the paycheck stubs as well, just to cover the bases. So there would not have to be a lot of exchange. Let me just give all the information they're requesting going forward. So I attached paycheck stubs as well. To the extent that you have all of their information, like their hire and their job title and all of that, you can do yourself a favor so you're not digging around for all of that, wasting time. Also, pre-populating the information at the bottom of the employer section, which is your company name, address, that kind of thing. If you have any number of applications, I only had 4, it wasn't that many. We had 4 that actually moved forward with the process out of the 6. Not so bad, but as you can imagine, if you have a 50 or 40 or what have you, repetitively putting your company information can get a bit arduous there. And so I would say that you can do yourself a favor, particularly if you're doing this as a rollout for your employees, of your existing employees, as we had done, to go ahead and pre-populate and type that information on the form and get it out to your employees. You can save yourself a lot of trouble that way as well. The process, as I mentioned, was not arduous. You get a notification that it's going to be about 30 days before they respond. And we did just receive our notifications last week, and it was within 30 days. So the process does work from that standpoint. And I found it to be well worth the time and effort to do it. And I'll turn it back over to you, Charles.
Thank you, Lisa. I just want to say how lucky we are at the Chamber to have Lisa, who does just such great work like this. And 2 things that kind of came to mind as Lisa was talking that I think are worth stressing. One is, as she mentioned, from the Chamber's perspective, doing this with 53 employees, and then, just a small percentage of that actually utilizing the program. The Employee Child Care Assistance Partnership is really built for employers that kind of go from that small to mid-size headcount. It's really going to be tailored towards that in this first iteration. Eventually, we want to get this thing to the point where it is more accessible to very, very large employers. And we've had a lot of large employers that are very interested in utilizing it. As you can imagine, completing this application for 100, 200 employees potentially, it could get a little bit difficult. And so some of the large employers that we've talked about with this program, they're exploring a lot of different ways to do it. So for example, targeting specific teams, piloting it on a specific shift. We've had some conversations about, folks, maybe they have a specific site, they're going to just roll this out on that site, that physical site for the workforce that's there. So some of the larger employers are kind of thinking it through. But again, if you are thinking about clients who might have or small to mid-sized employers, it's really going to be kind of more structured for them at the moment. However, we didn't want to preclude large employers from being able to participate. And there are large employers that are actively exploring this and seeing how they might make it work for their own businesses. The other thing that I wanted to mention here too, in terms of where these dollars go and who employers actually pay. So when it comes to these financial contributions, all dollars flow directly to childcare providers. So the employer would actually be sending a monthly payment, or however it gets worked out, directly to a childcare provider. So that would mean that employer would be setting up these new vendor accounts and making those payments directly to the childcare provider itself. The state is doing the same thing. The state are making those payments directly to the childcare provider. Anything that's not covered by the employer and the state match, that's 100% on the employee to pay for that difference. And that's exactly how the program is designed. It's a 3-part partnership, right? You have the employee, the state, and then the employer. And so in most cases, the employee, they're probably still going to make the majority of that payment, whereas the employer and the state are stepping in to help just defray some of those costs, bring that cost level a little bit down to make it more manageable for that individual employee. So I think that's just kind of an important thing to keep in mind as you think through this. I want to close.
Hey, Charles, we had one question come in. I want to stop you right there because it kind of goes back to the larger employers. Are there any industries that would be excluded from this? We had a question about local municipalities, whether they could be included as well.
That's a great question. As the legislative text read, which is kind of where I have to speak to from this, It looks at specifically nonprofit and for-profit companies. Those are the entities. Now, I can tell you the legislature, their intent was for this first round to not include public sector employers. And they had a variety of different reasons for that. So my understanding of it as written, now the Cabinet for Health and Family Services, they could have a different interpretation. My understanding though is that this would be private sector only in this first round.
Got it.
Yeah, but that's a really, really great question, and a good one to ask.
So if they want to challenge that, who would they write? Their state legislator?
Yeah, I'm not going to comment directly on that one. I think there's a variety of venues they could explore to work through that issue, but a state legislator would be a good potential place to go. Good question.
We had another question come through. I think it's Beth Cox. The largest challenge with helping employees understand how to explain it to the childcare providers. And I've heard this too. There are so many childcare providers out there that are not aware of the program at all. And so our employees are actually educating them on the program, or they're paying different rates. So you might have a different rate for summer as you do for fall or for after school care. And it changes quite frequently.
Yeah, that's a great question. So one of the things I will tell you all broadly, one of the headwinds that we've had with this program is awareness. And so the chamber has been looking for opportunities to raise awareness. The state is out there marketing it right now. And so I think a lot of folks are in that learning process. We are talking with some of the professional childcare associations that operate in the state about working with them to develop specific programs for childcare providers. So here in this context, we're obviously talking about it from the employer perspective. I think we're going to see some programming come online fairly soon that's targeted specifically towards childcare providers, so they understand how this works. So I think that's something that we'll see over the next couple of months, and that will make this experience easier for everybody. But that's another big reason why we're so enthusiastic about doing webinar opportunities like this. It's been one of those things where it's just been very difficult to get the word out. And that's kind of the nature of the beast. But yeah, that's something that is a challenge that I think will start to be addressed over the next couple of months. It's a good question.
And what about the changing rates? So potentially paying something, different in the summer, or maybe you need more care one week because you've got a flexible schedule at work.
Yeah, I think a lot of that will have to be kind of worked out on an individualized basis as they fill out those applications. For the most part, when it comes to the employer, unless an employer is offering like $300-400 a month and the state is stepping in with a comparable match, in a lot of instances, that's probably not going to be a huge problem. But if you're talking about a benefit to the range of like $100, $150, something like that, the state comes in and matches that, say $100, in a lot of instances, you're probably not going to end up in a situation where you have an overpayment. Now, I will say broadly, overpayments, those are things those aren't supposed to happen. If an overpayment occurs, it's kind of on the childcare provider to notify the state and the employer of this issue, and there's a process for rectifying that. So in a lot of instances, again, depending on that match size, that might not be that much of a problem. That does remind me of one other thing I want to mention on this too. Any member of this partnership, whether it's the employee, the employer, or the childcare provider, they all have the option to terminate participation in this at any point. And so if you do this, you are not locked in. The one requirement would be is that if an employer just sort of unilaterally decides they want to pull out of the program, they would just need to give a 2 weeks notice to the childcare provider that they're going to be ending or to the state that they're going to be ending their participation. Similarly, if there's a termination or a separation between the employee and the employer simply just needs to notify the state within about 3 business days of that termination taking place, and they can end that program upon that, within that time frame. So that's something too. Any employer that does participate in this, that's something you might want to integrate into your termination process or your separation process. Just adding that to the checklist. If that employee participates in this program, you need to notify the state promptly, and that's simply designed to prevent some of these payments from going out when they really shouldn't be going out. So that's the concept there. I do want to kind of close with just making folks aware of some of the different resources that are out there that you can use to learn about this program. You can go to the Division of Child Care website. That's the state agency that is administering the program. They provide a program overview. That's where you can find the application. You can also learn about additional state child care resources. At the Chamber, we have made a whole bunch of different resources available, including an FAQ that Lisa mentioned. We have a resources guide, which we'll talk about more here in just a second. We also have a recommended employee survey template. Like Lisa said, the way the Chamber did this, we utilize just a quick email to do this. If you want to do something more elaborate where you can learn all sorts of different things about childcare challenges being faced by your employees, we have some recommended survey questions that you can utilize. You can pop that into your email. You can use SurveyMonkey, whatever platform that employer utilizes to kind of communicate in this manner with employees. You can also find easy access to the application via the Chamber website as well. With this resources guide that I mentioned, I do encourage a lot of employers to look at that. At the end of the day, the intent behind this program is to encourage employers to think about the childcare challenges faced by their workers and to think about solutions to those challenges as a way to increase workforce participation and also improve employee retention. If this program works for that employer, that's fantastic. That's what it's there for. It's a tool in the toolbox that employers could utilize. But if there's another program that might work for you, if there's a federal tax credit, for example, that catches your interest, there's other examples we point out in this resource guide where employers have made unique relationships with childcare providers to reserve slots specifically for their employees. Or if you have a large employer who's interested in perhaps opening an on-site center, which we've seen some large employers do, there's some resources that you can utilize for this. I'll close by simply just saying this type of benefit is likely something that's going to become more common as we move forward in the future. And a lot of that has to do with just the nature of the labor market and the trajectory that we see for the labor market going forward. The challenges that employers are facing with hiring today, I think they'll ebb and flow. They're not going to get significantly easier though. And a lot of that simply has to do with the demographics of our nation. We're getting older and there's just simply going to be fewer people in that working age population to go around. And so employers are going to have to get really creative when it comes to removing barriers for folks to participate in the workforce and also retaining workers. This is one of those tools in the toolbox that we wanted employers to have. And so that's really at the heart of what we're trying to do here. So with that, I think Lisa and I are happy to answer any additional questions that you all might have, but thank you for listening to us and for inviting us to talk here.
Thanks, Charles. I'm going to read one other one from the chat. And it goes back to the same, when rates change within a childcare provider, they just resubmit the application then, correct?
So if the rate changes for whom now? For the employer?
So for the employee, if the rate for childcare changes, they're in a summer program, they go back in the fall, the rate's a little bit higher or lower in the fall if they're in school. Do they resubmit an application?
The only thing that I think would require them to resubmit or adjust an application is if the rates fall to a certain point that the employer contribution and the state match would result in an overpayment.
Got it.
So if that happens, so for example, if the employer is providing $200 a month, the state is providing $200 a month, and the cost per month fall to $350, there will need to be a process. I would anticipate, you would need to amend the contract, I believe is how that would work.
Got it. Okay. Any other questions? I've got one more that's something you and I had talked about. So, and really something that I've talked about with several people, even through the chat already today. We have a few employers who don't necessarily have the extra dollars within their budget to account for the child care assistance program, but their employees would like to potentially take a pay cut, save again on taxable income, and then also have those funds matched through the state. Is there anything in the text that would preclude an employer from doing that?
So I'll offer a quick answer to that. And Lisa, if you have any thoughts, I think we certainly welcome those as well. I'm not aware of anything in the legislation or regulations related to this that would prohibit that. However, I can't speak to whether or not there are other state or federal laws that could potentially prohibit this from occurring. Broadly, I would assume this would certainly require employee consent.
Yes.
In some form. There are some tax implications that I'm not sure how IRS would react to, simply because that reduction in that employee's monthly income or their monthly payroll, the child care benefit is treated differently.
Yes.
So there's an exclusion up to about $5,000. So there is a tax impact. But again, I can't speak to exactly how state or federal law treats those situations. Lisa, any other context that you can think of?
I agree, Charles. I think a little bit of legal guidance there would be very helpful because it pulls in some other third-party factors that would want to be considered first.
Fair. What about is the employer or state portions, are they taxable to the employee?
So under Internal Revenue Code rules, this would fall under a dependent care assistance benefit. And generally speaking, those benefits are not considered taxable income up to $5,000 per year, per tax year. So as long as the employee the employer contribution falls below that, that should not be considered taxable income. Similarly, the state match, the legislative text specifically specifies that the state match is for the public welfare, and that's a way of communicating this is not considered a taxable income. And so we have had some tax attorneys kind of look through this. That's been the general consensus. I don't know if you guys knew this or not, but when you ask IRS these questions directly, they don't really like to answer. But the analysis that's been done so far, that's been the general consensus, is that this would fall under that scheme.
Well, and given that, there's some incentive for employers to say, well, if you need more, we'll pay you less and we'll give you more through this package. Because then they don't have to pay Social Security. There are other things that the employer saves money on. So I wouldn't suggest that everybody move in that direction, but you can imagine that that's going to happen some,
Sure.
Especially small employers.
What's the best way to get in contact? I know it's the Cabinet of Family Services or Health and Family Services that really runs the program. We've had a couple of employers that have submitted applications with questions and haven't had responses, and had somebody just share the same in the chat as well. What's the best avenue if you have questions?
Go ahead, Lisa.
I was just going to say, when I've reached out, I have gotten a response, and I was trying to put the phone number and information in there. I'm assuming it's what you already have. I would be persistent, perhaps, in regards to that. Might be the best thing to do the follow-up. When I have, for example, I'll give an example. When we had our responses received, they came to the chamber and didn't have my name on it. So I was like, please put my name on there. And they responded. So I have been getting response from them. I would try again, would be my suggestion.
Okay. Any other questions? Angie reached out about the thresholds that would not allow the match to be 100%. That's really based upon the total income of the family. So as an employer, you won't really know what percentage that employee is getting because you won't know the total income for that family. But you can see those on the website.
That's right. And that component, that's kind of out of the employer's hand. The employer, they agree to make that contribution. However, in the event that the employee's household income falls below a certain level, and again, that fluctuates based on family size. There's some charts we could look at to kind of help you understand that, but the employer doesn't necessarily, that's kind of out of your hands. But when that does happen, you will receive a denial. And the reason for that denial is more than likely because the cabinet has referred this individual to this other program. And so when that happens, the employer you don't technically need to do anything. For the employee, this actually probably is going to equate to a better benefit for them because it's essentially going to be fully subsidized childcare with the exception of a small co-payment. Co-payments are currently waived. That's due to some of the federal funding that's come down in response to the pandemic. I know this has already happened in several instances. We talked to employers where they've seen this, and it's kind of another one of those examples where you might be surprised to hear that happen. The fact that someone's eligible for free childcare and they don't know it. That's another good example of a program out there that people don't know about. But again, from the employer perspective, the employer made that connection. The employer helped connect that individual with that resource. I think that's still a good benefit for the employer.
Great.
And does the chamber have any resources for employers to reach out to say, hey, we have a question? Would you advise them just to call the state, or can they call the chamber?
You know, I can't speak for Lisa necessarily, but we're always happy to help members kind of work through these issues. The important thing to remember, though, is that we are not determiners of eligibility. We can't tell you 100% if an application will be accepted.
Sure.
So I think it's always best to engage on some of those thorny questions directly with the cabinet itself. So that way you have an official response.
I agree. Happy to share, further insights for anybody that's wanting to know about the experience. But I think from there, I would leave it to the Cabinet for Family Health Services.
Any final questions from folks out there? We're glad these things keep trickling in. But
we'll send out an email following the webinar today. So we'll actually have the link to the recording of the webinar, and it's also will be available on our website later this week. So anyone who is hopping on at the very end and has questions, or if you want to share it with anyone within your organization, would be happy to have you do that too. So we'll follow up with.
Boy, Lisa and Charles, thank you very much. And for the whole group that signed on, thanks. And to the HRG team, Kendra and Candace and all the others to help make this happen. We really appreciate it. Got to keep that information flowing.
Thank you all.
Thank you.
Have a wonderful day.
Thank you.
Thanks.